Do you pull back from equities in light of this risk-off backdrop?
No, not necessarily. I mean, it's one where you've got to keep an eye on the various sort of situations going on. Obviously, equities are likely to be a volatile asset class when things get bad again. But the likelihood is that volatility has been expected to rise from these levels for some time anyway. So clients should be well prepared for that. But as long as the economy, the world economy, remains enough sufficient forward momentum to generate enough corporate profit growth to see valuations stay where they are, then actually we think equities are still going to be the place to be.
What about the stumbling block that was Carney's comments last night? Surely that's going to have some impact on the equity markets today.
Yeah, in the short term it will do. But we've been warning clients for some time actually that interest rate rises may well be a 2014 event, not a 2015 event. And the reason behind this is that retail sales and unemployment data have for some time been telling a different story to the GDP data. If there was such a thing as an alien central banker and they came to Earth on the today and were allowed a snapshot of trends in the UK economy, you'd doubt that if there was such a thing as an alien central banker, they'd decide to set monetary policy at emergency levels as it remains in the UK at the moment.
What do you like particularly right now? There must be a focus on the industrials because of the capex story, which you've said before. What do you need to be cautious about on the back of what Carney said specifically?
Yeah, I mean, in the UK, the consumer discretionary sector has obviously done very well for the last couple of years. They've anticipated this recovery in the UK economy, ignoring a lot of what a lot of the doomsayers have been saying about the UK. And as a result, they've basically in the last 3 years doubled the return of the wider benchmark. You can see consumer discretionary stocks struggling to make headway in the near term on that news. And certainly we've sort of de-emphasized consumer discretionary in our portfolios, having been quite positive on it for the last 3 years.